Hey, welcome back to Stock Shark. In today's episode, we will be looking at one of the top growth stocks with high potential to get appreciated for next 1 year. Let's dive into the details. This is for the company called Upstart Holdings, UPST. It's a ticker symbol. What they do simple lending business, right? But they have a lot of technology behind it. Let's dive into the details. What actually they do? They have an artificially enabled platform that matches, the retail customers who need of unsecured lending or unsecured loans, then match them with various financial institutions based on particular state, right? So they are actually matching, on the one hand, the retail customers, on the other end, the financial institutions who ready to lend this money. And by the way, this is unsecured lending, so the interest rate would be little higher than the rate based on collateral. So UPST offers various type of loans, personal loans. One can apply for to consolidate their debt, to pay off their credit card debt, car loans, various other type of loans like medical emergency, medical loans, etc., etc. Basically, people, most of them apply for personal loans, and their platform automatically enable and offer them the best rate based on their profile. What is their significantly different model they have compared to the banks, right? See, in US, most of the time, 90% of the time, banks look at your FICO score, your credit score. Based on that, whatever score you got, based on that, they lend you money at appropriate interest rate they would charge. This is actually good for people who have established personal financial record in US, right? But millennials, look at those who actually about to start their career to earn some money, or immigrants who come to US. Yeah, US is always land of immigrants. So for them, waiting for 3 4 years to establish the credit score or credit quality and then apply for loans, it's like a world standard. So the UPST look at individuals' profiles. So generally, the individual whoever wants to apply for personal loans, they come to their site, punch in their personal details. Then UPST, they have artificial intelligence model that automatically determines the person's ability to pay back that loan. And one of the best thing in UPST is it's fully automated. If you look at last 3 4 years, the percentage of automated approval rate over the online, after you entered the details, it's staggering. I mean, it's going up. So what it means is they used to automatically update only, like, I mean, approve only 18% to start with, right? Q1 17, but they slowly improved. Now they've been approving it almost like approximately 70% of the time automated. So the approval rate is getting automated by matching individual situation and the loan amount, interest rate, along with the financial institutions who wants to offer that. So they don't take any personal risk, they pass on the risk to financial institutions. They are only matching both the players, buyers and sellers here, right? So they are only having a platform. Let's look at what is the global opportunity, what is exciting here, right? So this is a standard going forward. I mean, I talked about in prior videos about bill now pay later, BNPL type model as well. The credit card business is going down. Millennials, they don't like to use credit card or a loan, get the loan based on their credit score. They want something customized for them, so they all use app, for example cash apps or something, some sort of a mobile based app, to pay their money, right? Same thing when it comes to get the money for lending. They don't like to get something collateralized loan. They want some unsecured loan so that they can pay back in over the period of time. So this is really a global opportunity. This is the trend actually across all the millennials all over the world. So UPST has a great global opportunity to go outside of US. I would think of basically go to UK, for example, in Europe, or some other countries in Europe. It's another big jurisdiction that they could get into. I don't think they are doing right now. They are only concentrated in US, but they have potential to go outside of US to Canada and other Europe, even to Asia like China, India. Those are all emerging market as well. And so this is they have tremendous opportunity ahead of them. To earn potential or lucrative revenue here. Look at their financials. Oh man, it's look at they started with like their total revenue 96 million to 163 227. They are jumping like almost doubling, tripling their revenue over the period of time. So that shows the familiarity of their platform among the masses in US. So that is really good thing. So they are accelerating, and if you look at their profit EPS also, it's improving really good from 5 cents in 2019 to 34 cents in 2020. In the last quarter, this is trailing until June quarter of 2021. So their revenue is 450, and last quarter they announced around 37 cents profit in Q2. But it's awaiting, only at the end of December this data will be updated here. But we will look into it, what is their forward guidance. But financial look really terrific. So the recent quarter, they mentioned about it. In June quarter alone, they got 194 million revenue, and they got 37 million dollar that net income. This is everything is really so good here. Then the forward guidance for next year is 750 million. Okay, so that's a huge growth, because the 2020 their whole year revenue was only around 220, as I shown you in the previous screen. But this year forward guidance from the company is 750 million, and so that's a very aggressive growth they are having. Um, so and before we get into the verdict, let's look at the technicals as well. If you look at the thing, they were like consolidating around 120 something up until first week of August. From the Q2 revenue, that surprised the market, and it shot up like anything, almost appreciated three times. It's closed as on Friday 24th September 2021, it's closed at 327.88. Huge move. I wouldn't buy right now because it's expensive. Right now it holds market cap of $25 billion approximately, which is very expensive by looking at any metrics, whether it's a PE or PS, a price based on sales, price based on earnings. Every metric it is expensive. I would wait for to let this pull back a little bit, either around 280, 270 area. If not, if it really slide back to 203, that that 50-day moving average, I think it has a strong support there. Then I would be buyer of buyer of this to accumulate for long term target of 460. That is where I'm thinking this is heading towards 460 to 480, because of global opportunity. I told you in US alone they have a tremendous opportunity, but if they expand this to outside of US, they have really great potential opportunity. But I wouldn't I wouldn't think that they could survive as a company, a standalone company. They will be bought by some other big player, which get consolidated into their platform, like JP Morgan or some other company like Bank of America. I mean, I don't think Bank of America can buy premium for this type of companies, but I would think of, that there are so many big sharks out there they could buy. So, but overall, I think this has a great future, this company, and one can wait for a pullback, then start accumulating it for long-term target of 460. By the way, this is not for trading stock, because it shot up so much. You never know when this will get pulled back, right? So don't. I mean, in my opinion, it is a bit of risky to do trading. Rather, slowly start accumulating it for long-term target. And that is the right way to play for this stock, either long-term or intermediate term. That is where, but otherwise the technicals like ADX, RSI, everything looks really bullish, but it's really overbought for now. So that's all, folks. If you like my video, please subscribe to my channel and leverage it. Thanks for watching.